York City. We'll go ahead and get started here in just a moment. But as always, we will do the nightly audio and visual check. Also, let me know if you can rewind the live broadcast. So if you just refresh your web browser, you should be able to rewind the stream. So assuming all's good on that front, the audio and the visual, we will get started here in a moment. Thank you so much for joining. I think we can go ahead and get started. Let me fix the mic here. Oops. All right, I think we are good to go, everybody. So good evening and welcome back to Walks and Wall Street. Today is Sunday, June 9th, 2024, about 9:18 p.m. Eastern Time, and we are recording live from New York City. Currently on the corner of 5th Avenue and Central Park South. It's a pretty lively night tonight. Today was the Puerto Rican Day Parade, so the city was pretty packed. It was pretty encouraging to see. Now that it's the summer, a lot more tourist activity, just a lot more activity in general in terms of travel, pedestrians, and the like. So I believe, as I've said multiple times, I really do think 2024, the summer of 2024 is going to be the most touristed summer in New York City's history. So we'll be tracking that to see how that plays out. Now, for those of you who are new to the live broadcast, today is Sunday, so that means we will be doing our Markets a Look Ahead live stream or our Markets Outlook broadcast. So Monday through Friday, we pretty much just cover the major economic events happening throughout the day, do an update on the markets. Saturday is our day off to explore different neighborhoods in New York City, kind of walk around, talk about some of the real estate, and relax. And Sunday is probably the big stream, the major stream, as we go day by day throughout the week, discussing all of the major events that are going to be coming up on Wall Street. So what I want to do is this. I'm going to drop a link in the chat, so if you look in the chat, My name should be highlighted. At Walks Wall Street is yellow. And I'm going to, since the sound is muffled. Let me see, hold on one second. Whoops. Okay, what about now? We'll do another audio check. I don't know why. I think these microphones could be... All right, how are we looking now, everybody? Thumbs up, thumbs down? Loud and clear. Okay, sorry about that. I don't know what happened. I plugged in the mic, but I guess technical difficulties happen. Anyway, where were we? Oh yeah, so the link, everybody just check out that link that I put in the chat. I think it's pretty resourceful and really, really useful for everybody. It's a link to marketwatch.com, but more specifically, it is the economic calendar. So if you click the link, it's going to say this week's major U.S. economic reports and Fed speakers. And this is pretty much something you should probably either print out or save on a weekly basis, because these are the major events that are coming up. Monday is going to be a pretty tame day. I think pretty much this entire week is going to be relatively tame, leading up until Wednesday, okay? Because Wednesday we are going to get yet another inflation report with the CPI index. Both the headline and the core CPI will be released at 8:30 a.m. So if you go ahead and type exclamation point news, N-E-W, no, not news, excuse me, exclamation point CPI in the chat. Once again, exclamation point CPI in the chat. This is going to bring you to a secondary resource. It is the Bureau of Labor Statistics website, or the BLS.gov, but it is the 12-month percentage change for CPI. And I want everybody to kind of refer to this as we go through tonight's broadcast, because it gives you the exact headline readings going back years. So as we can see, if you're looking at the chart, I might as well bring you guys behind the desk here for a moment. Here you can see the 12-month rolling average of the Consumer Price Index. And in June of 2022, is when we hit our high of 9.1% annualized inflation in the United States, which is just unacceptable, ridiculous. Now, we've been doing a good job of coming all the way back down to June of 2023 at 3%, but then as you can see here, we've pretty much been sideways. So the question is, and this is something we've been talking about for a long time, is 3% or 3% plus inflation the new 2%? As we know, the Federal Reserve's inflation target for CPI is 2%. So in April of 2024, we had a headline reading of 3.4%, much, much higher than expectations. Now, fast forward to this Wednesday, June 12th, the headline number for CPI, the median forecast, okay, this is what the majority of the experts on Wall Street are expecting. We're expecting about 3.4% again. Now, looking even further into the week, we have the FOMC meeting. And I'm actually going to give you another primary source here. If you type exclamation point CME in the chat, once again, exclamation point CME in the chat. This is another really good website I think you guys should save to your web browsers. This is the CME Group Fed Watch tool, and it gives you the countdown clock to how many days, hours, minutes, and seconds until the next FOMC meeting. For those of you who don't know what the FOMC meeting is, it stands for Federal Open Market Committee meeting, when all of the Fed presidents get together and they essentially decide the forward pace of monetary policy. We hear from the Federal Reserve President, or the chair, Jerome Powell. He gives a speech, he gives a little bit of a synopsis on what he's seeing in the economy, he gives us a forward-looking statement as it relates to inflation, and we may get a rate hike, we may get a rate cut, we may not get any change. Now, if you look at the probabilities, okay, if you scroll down a little bit on the page, you could see the June 12th meeting. there's a 99% likelihood there's going to be no change in the Fed funds rate. And this is futures. You can just look at the futures contract. This is why this is really helpful. So each one of these little data points here is a future Fed meeting. You have June 12th, you have July 31st, September 18th, and so on. So it's pretty much 100% locked that there's going to be no change for June, so in 2 days. Now, as we look down kind of the table here, these are all the different probabilities and likelihoods of a Fed rate cut at each individual meeting. And we've pretty much done a 180 on the street. Many people, or I should say most people, were thinking of at least one rate cut already by June. Doesn't look like that at all. So busy week. We have CPI, we have the FOMC meeting, 2 p.m. on Wednesday to set their interest rates. Thursday, which is June 13th, we get the more inflation data with the PPI, year-over-year PPI, core and headline, and then we get initial jobless claims. So with that being said, everybody, we'll take a quick look at equity futures. So if we look at ticker symbol ES, which is the E-mini futures contract for the S&P 500, we opened up about flat, 5,354 on the S&P 500. Ticker symbol YM for the Dow Jones Industrial Average of the Dow 30, also opened up about flat, down about 5 points, 38,852. And last but not least, the NQ, which is the ticker symbol for the NASDAQ 100, also about flat, minus 6.75 points, 19,031 for the Dow. We'll quickly take a look at some commodities. Ticker symbol CL, which is crude oil futures, trading at $75 a barrel. Let's take a look at gold. Gold got hit yesterday pretty hard. Gold futures still above 2,200, trading at 2,294. And that last but not least, we'll have a little bit of a pivot over to the digital form of gold, which would be categorized as Bitcoin. That is down fractionally. Bitcoin is trading at 69,533. All right, with that being said, let's go ahead and close up the laptop here. I'll say hello to everybody in the chat and we will get this stream started. Just as a last quick reminder, everybody, go ahead and check your email, because I did send out on Thursday our free investing newsletter called Behind the Street. We talked about a lot of interesting data as it relates to the wealth gap and the wealth divide in this country. What exactly caused that? How does the Federal Reserve play its role? So if you want to subscribe to all of our research, we send it out every other Thursday right as the market closes. You can go ahead and scan the QR code on your screen and punch in your email, and that will take you to our Substack, where we publish all of our research for free every other Thursday. All right, let me go ahead and close this up. We'll get started. Let's see who we have in the chat tonight. Hey, Shannon is here. I see Tatted T. This is Miami or New York City better? I want to move from Canada. Which one would you suggest is better and why? Well, I always choose both. I think New York City and Miami have very different value propositions. So I would say, depending on what line of work you're in, right? If you can give me some additional context, what do you do for work? What do you like to do for fun? But in an ideal world, if you have the money, I would split my time 50-50 between New York City and Miami. I don't think you can possibly get two better cities that offer endless opportunities and pretty much endless, quite frankly, fun than New York City and Miami. So if you are in the financial business, maybe you work on Wall Street, something like that, I would say, get your footing and get the groundwork laid in New York, and head over to Palm Beach and join us down there. Hey, RJ, what's going on? Gary Carpenter, Wall Street Finance guy, is here. Thank you so much for joining. Dinesh, what's up? 3T3. Oh, cool. New England Crypto. Awesome, dude. You'll have to send me some photos of that new rig. We're right outside of the Sherry Netherland Hotel. Lena Sandoval, Tug Carter, what's up? I think we'll probably walk directly down Fifth Avenue tonight. Looks like they're doing some construction right outside of the Plaza Hotel. If you look all the way in the distance, that is Deutsche Bank Towers, as well as the Trump International Hotel and Tower. Fellow traveler says we're buffering. Really? I don't know. I don't know about that. Let's see. Someone says you're in the car rental business. I don't know. I really don't know. I don't know what to say about that. I think both cities offer ample opportunities. I guess it depends on what type of... I'm not really too familiar with the business, but I would assume if it's more high-end, like luxury rentals, maybe that would do a little bit better in Miami because of the weather, perhaps. All right, let's go ahead and head all the way back down towards 34th Street. I wanted to try to get down towards Soho tonight, but I was locked away in the office, unfortunately. Elias, what's up? But yeah, it was a beautiful day in the city. Finally, we have that true summer weather. Across the street, you have the Aman, New York, and they're building an Aman hotel in Mid-Beach, Miami, which has a really interesting facade. Very, very interesting facade. Now, I think the topic of... I was going to say the topic of the week, but really the topic of the year has been inflation. And I think as we continue to approach closer and closer and closer towards Election Day here in the United States in November, here's the Tiffany building that's owned by LVMH. I love the blue backlights here. LVMH put about $500 million worth of renovations into the building. I think it looks fantastic. But with, Election Day inching ever so much closer, it's hard to believe that in November we are going to be electing a new president. And one of the biggest topics of conversation has been inflation. Now, yes, it's true, and I provided you with that source from the Bureau of Labor Statistics. Again, if you're just joining, if you type !CPI in the chat, it'll bring you to that infographic where it actually gives you a visual representation, line item by line item, of all the different categories of inflation, whether it be shelter costs, which has been really, really difficult to try to get down, right? Shelter is usually a lagging category, so to speak. You have energy, gas prices, food, everything. I think you're going to start to see this come into even more hyper focus from a political standpoint. Now, the median consensus on Wall Street for this week, for the May 2024 CPI headline number, is 3.4% year-over-year increase. Now, keep in mind, I should say, the Federal Reserve's target is 2%. And we've been range bound here above 3% since June of 2023. So we'll see if there's going to be any more material progress. I think the only thing that can kind of give us a little bit of hope is the recent price action in crude oil, as we're standing right outside of Trump Tower, right off of 5th Avenue, 56th Street. This is the residences, 721 5th Avenue. You go right in here. So we'll see. It'll be very interesting. Very, very interesting. to see if inflation's going to come in hot or if we're going to get some unexpected cooling. So whenever you watch the news and you see Trump come out into his, entourage motorcade, it's always through this entrance, which is the side entrance to Trump Tower. Very seldom does he come out the Fifth Avenue entrance, and you'll notice all the barricades, NYPD presence. There's actually not a whole lot here tonight, which makes me think that the president's probably in Florida. So, yeah, Alan says, guess the Donald is finally back in Florida. Looks a lot less guarded. I was just gonna say the same thing. It looks normal, like totally normal here. You have a few NYPD cruisers, but that's really about it. I guess it makes sense, right? The verdict is in. I think he only has to come back due to the sentencing stuff, right? VC Motors. This is like entertainment, excitement, and never being bored. Miami and New York City. I also don't speak Spanish. Can you get away without it? Yeah, for the most part, I would say just work on learning Spanish. Trying to brush up on your Spanish as best as possible, I think should be the goal. But I could say with 100% certainty that if you move to New York City, you're never going to be bored. It's impossible. And you could say the same thing for Miami. It's impossible to be bored. If anything, there's just way too many distractions in both places. This is the Peninsula Hotel to your right. And to the left, you have the St. Regis. You also have the Polo Club. Now, I was walking past here today because my office is right at the end of the block. There was this matte black Cybertruck. Let's see if it's still here. You're starting to see a lot more Cybertrucks now in New York City. It is still here. Now, when we were in South Florida, there was this really bright matte blue Cybertruck in Sunny Isles Beach. But look at this one. This is a matte black Cybertruck right outside of the St. Regis, parked directly outside of the Polo Bar. I love it. I think these things look unreal. What do you guys think? It's cool, right? There's definitely a lot more of them in Florida. And it's so tremendous. Like if you see this Cadillac Escalade here, which is a really, really big car in both width and height. Like Escalades are massive, so are Chevy Suburbans. The width and the height of the Cybertruck, at least it appears, much wider, much longer, and much taller than the Escalade. It's massive. All right, TK Porsche is about 250 Cybertrucks are on the resale market already. Lots of early buyers trying to flip them. Yeah, and they're listing them for like ridiculous prices too. I saw a few of them. Some of them were on the market for like $200,000. I don't know. I love them a lot. I feel like it's either you hate it with a passion or you love the Cybertruck. I think the thing looks so sick. We'll try to get another shot of it from here. It looks like the future. It honestly looks like the future. And this is a pretty cool shot because you have the logo of the Polo Bar. C. Brown says those vehicles are so unattractive. I feel as if it's you either love it or you can't stand the thing. But I like it. Brad says, no, Tom, it is not cool. I drew that car when I was 7 years old. Hilarious, dude. I don't know, I like it. I think it has a good look to it. And trust me, it is huge. This is a Lincoln wide body, and then you have the biggest Escalade behind it, and it just dwarfs both of them. I just don't know where you would park that thing, because a lot of New York City parking garages have height limits. Some of them won't even take an Escalade. There's a lot of parking garages on the Upper East Side, the Upper West Side, that will not take a Cadillac Escalade or a Chevy Suburban, which is wild. And the going rate, like let's say if you have like an Aston Martin, something like that, and you want to park it monthly in New York City, well, it's going to be around $900, but they charge you a $350 surcharge for having what's called an exotic. So there's like a $350 monthly charge just for having an exotic vehicle. So sometimes you're looking at $1,200, $1,300 a month just to park a luxury car in Manhattan. It's crazy to think about it, because some people are thinking, wow, my rent or my mortgage is $1,300 a month. Well, oftentimes in New York City, and since we have the light, we might as well cross. This is the University Club. Sometimes in New York, you could spend $1,100 to just to park per month. I always showcase this building, but University Club is really unbelievable. G5, G5400, which is why is there a surcharge for exotics. I think insurance reasons. Hey, how are you? Oh, nice to meet you. How are you? Good to see you. Hey. Oh, thank you. Nice to meet you.
Following you for an hour.
Oh, wow. Thank you so much. Hey, well, enjoy the city. That's awesome.
You must have been sitting over there by the airport?
Yeah, I just started by, yeah. Oh, thank you so much. That's awesome. Are you guys here for the Puerto Rican Day Parade?
Yeah.
How was it? I didn't get a chance to see it. It was awesome? Wow, good. That's good.
But it's one of the best ones because we're from Chicago.
Oh, yeah?
And theirs is
Cool.
only for an hour. This one's like 5 hours.
Oh, no, I know. And it goes all the way down Fifth Avenue, right?
Yes, yeah.
Cool.
Yeah.
Awesome. How long are you guys staying in New York?
Tomorrow
Oh,
evening.
leaving tomorrow. Okay.
And we're done.
So you're going to Soho?
I'm going to try to make it there.
We were there yesterday.
Yeah, Soho is awesome in the
We got
summer.
friends over there.
Yeah, Soho, NoHo area, it's beautiful in the
Yeah.
summer. All those cast iron facades, it's great.
Yeah. I want to say that you have a very bright future ahead of you.
Oh, thanks.
Doing what you're doing.
Appreciate it.
Yes, smart guy.
Appreciate it. Well, it was a pleasure meeting all of you, and
Yeah,
enjoy the
likewise.
city.
I told you, I hope I
Yeah.
bump into you, and we were like, he's over there.
No, for sure. Yeah, if you guys need anything, let me know. Send me an email. Okay, hey, nice meeting you. Take care. Have a good one. Safe trip back.
Thanks.
All right, we'll head over to 6. Those are nice people. Visiting from Chicago for the Puerto Rican Day Parade. Love that. Now, if you go on Google Images, check out the inside of the University Club. It's kind of like a mix between the Morgan Library well, yeah, it's a mix between the Morgan Library and the Stephen Schwarzman building. I was about to say the Henry Clay Frick Museum, but that's under construction, so who knows what the inside's going to look like now. But you know what? I almost forgot. Yeah, the Puerto Rican Day Parade was today. There was a bunch of stuff going on in the city today. This weekend. Saturday there was a big parade. I was looking up, I think it was an Indian Heritage Parade, and then Puerto Rican Day Parade. Pretty cool. Yeah, Adam, Luke. Yeah, I don't think any smoking's allowed in the University Club. Maybe. Hey, what's up, Dario? Good to see you. We're gonna make a little bit of a detour to 6th and you'll see 53 West 53rd Street, which is a Billionaires Row type building. Paham, says Tom, build a garage just for trucks. Well, the problem is, I don't think it's going to be very difficult, because let's just face it, regardless of what you think the city should do or not, New York is essentially waging war against vehicles, right? Again, whether you like it or not, that's not the point. But with the congestion pricing, which was now rolled back, Governor Kathy Hochul, I'm sure all of you have seen that, she made an announcement to temporarily suspend the rollout of the congestion pricing. Right now, the whole point of the congestion pricing is to deter people from driving their cars in the city, which, you know my opinion on that. I think it's just an added tax on the working class, middle class New Yorkers and people from the outer boroughs who do business operations in the city. But they're also taking away a lot of street parking too. New York City wants to become, even though it is extremely walkable right now, they just want everybody, essentially without saying it, they don't want anybody to own a vehicle here, right? They want you to take the public transportation, they want you to take the bus, maybe you take a cab every now and then, but they are really, really making it difficult to own a car in New York. Now, additionally, the last thing I'll say about that, if you look at the new plans over the next 2 years, 24 months, talking about city bike infrastructure, they're actively reducing the amount of space for street parking, right? Both paid and free street parking in the city to make way for more city bikes. So what is that going to do if you do have a car in New York City? Well, you're going to have to be forced to go into a garage. And that means the prices, the monthly rent, just to park your car in one of these garages is going to go crazy. It's going to go crazy. That's my prediction. Hey, Colton Manning, what's up? Oh, Colton, I think, you know what? I think I passed you today. I think I walked right past you. This was about, I was on the phone, but this was probably around 7:45. I was coming back from dinner, walking back to the office, and I was walking right here. And I think you were outside walking by the halal guys. I don't know if that was you. I was like, is that? I did like a double take. I needed to get back to the office, but I don't know if you were working today, but I thought it was you. I was like,
What happened?
is that Colton? I think it is. Anyway, Mike sees this at $1,200 will soon feel like a good deal. I think that there's enough wealthy people in Manhattan that will just eat it and pay the $1,200 a month. Now, you can get some garages if you just have a regular sedan. You can probably pay, $600 a month to park. Just, a regular sedan. But again, I think the biggest play, or the bigger play, I should say. Hold on, I want to show you the very front of this building, 53 West 53rd Street. I think a lot of these parking operators who own these garages, who then lease out their space to valet parking operators, they're going to stop doing that business altogether, and they're going to start to condominiumize the individual spaces in the garage and just blow it out and just sell the individual spaces. Now, once you're about 70% sold or 75% sold, then that creates a whole new condo board, and the owner totally just wipes his hands or her hands with the building. And I think that's probably going to be the new norm, because people just don't want to deal with the operations anymore. And people are buying them. People are buying individual parking spaces anywhere between $135,000 to $350,000. That's how much we've been selling them for. So this is 53 West 53rd. It's right next to MoMA, Modern Museum of Art. This is one of the buildings that is, it's technically not on New York City's Billionaires Row, because that's 57th Street, but it is a Billionaires Row building. Has a private restaurant. You could actually look down at some of the people eating. We'll see if it's that busy. But this restaurant services all the individual units in the building too, which is cool. It's an interesting building. Hasn't really been selling too well though, in comparison to the other buildings on Billionaires Row. The floor plans are a little, well, if you go to Street Easy, you can kind of see what I mean. There's too much, I think the architect overdid it on the design. So you have these slanting triangular windows and almost low ceiling heights in some of the units. So if you can see how it kind of comes to a little teeny tiny pinpoint at the top. If you go to Street Easy, you just type in 53 West 53rd Street, just pick any unit. You'll see what I mean. It's almost, you kind of feel claustrophobic in there a little bit. This is MoMA. This is Museum Tower. This building is quite nice too, has decent views. Doc 7 says no one can compete with 220 Central Park South. I agree. Because they've managed to, with 220 Central Park South, they've managed to keep the same feel as 15 Central Park West. That brick and mortar, limestone, really heavy facade, and kind of deviated away from the more glass, glitzy skyscrapers like Central Park Tower, 157. I think if I had to pick one, I think my favorite is 157 though. Because if you have a full floor unit at 157 on a high floor, you are literally perfectly dead centered on the park, right? Central Park Tower, yeah, you have good Central Park views, but you're not dead center in the middle. 432 Park Avenue, yeah, you have unbelievable views, but you're not dead centered on the park. You're all the way over to the east side. So it's very hard to replicate that, and it will never be replicated. Oh, Colton Manning says we just missed each other. Ah, so it was you today I walked past then. Hey, JC, what's up? Oh, really? iOS 18 is getting released today. I'm actually not looking forward to that. I got a forced update on my phone. This is probably about a month and a half ago. And I think the new iOS update's horrible. This is the Ferragamo store. Hey, Wall Street finance guy. This chances I'll be in New York City July 4th. Hope to see you. I'll be here. I'll be here hopefully all summer, with just a few short trips to Miami in between. But for the most part, I'll be here for sure. Oh, another, I guess, big thing to look forward to. Monday or tomorrow, I think Nvidia's stock split takes place. I think they're doing a 50-to-1 split. So that should be interesting. Options activity should be really interesting on that. Prayer Kid. Says Wednesday will be interesting in the market. I'm thinking we drift higher Monday and Tuesday. Yeah, I mean, I think, volume will probably be very, very muted Monday and Tuesday, leading into CPI and leading into the FOMC meeting. Right? Those are really the two main, really just the two main catalysts, if you will. Or I should say event-driven themes of the week. We'll see if we get any gaslighting from Fed Chair Jerome Powell about progress of inflation. We'll see. Again, the one big thing that I think is helping us out, or that could help us out, is that crude oil is actually coming down. We're at $75 a barrel. So I want to point out this building. I've pointed it out many times, but it's actually a very important building in New York. 641 Fifth Avenue right here. You have this Eden Fine Art Gallery. This thing tends to move all the way around. It's like little pop-ups. But this is Olympic Tower. 641 Fifth Ave. This was one of the first main condos that was marketed in New York City to foreign buyers. And the good thing about it is that you're right across the street from St. Patrick's Cathedral. And what does that mean? Well, this means your views are going to be protected. So your Midtown Manhattan views of the Empire State Building, Chrysler Building, One Vanderbilt now, Rockefeller Center, and all the way down to the World Trade Center, it's going to be protected because this building's not going anywhere. Okay, I can guarantee that. And what happened back in the day, and I've told this story many times, we do have a lot of new people here, co-ops in New York City, generally speaking, were very, very prejudiced against foreign buyers. Even if they were well capitalized, even if they could purchase the unit in all cash, they would have to get approval from a co-op board. And oftentimes, these co-op boards, the people who were on them, didn't want people who weren't Americans buying there. So a lot of developers caught on to this, and they're like, okay, well, we'll build condos in Midtown Manhattan. Now, at the time, nobody really wanted to live in Midtown Manhattan. People wanted to live on the Upper East Side, in places like Sutton Place, right? In townhomes and co-ops, where it was a little bit more quiet. Nobody wanted to live in the business district where you go to work. So condos don't have any of these restrictions. So if you look at the history of Olympic Tower, 741 Fifth, right there, it sold really, really well, and the vast majority, overwhelming majority of buyers from all the sponsor sales were foreigners. And and the success of that building really kicked off this trend of ritzy, glitzy condos in Midtown Manhattan because of the high demand from foreign buyers. And it is, it's an older building, but it's a nice building. If you've ever been in any of the units, the views are really good. The views are really, really good. It doesn't have too many amenities. It has like a very, very small gym, but chances are if you're going to be buying or renting in that building, you're doing it because of the views. This is right outside Saks Fifth Avenue. NBA Elias says, will anyone here buy Nvidia after the split? Well, I don't think I will. Let's wait for the FDNY to come down. Now, could Nvidia run more? Yeah, and it probably will. But if you have a position in this thing and it continues to rally up and have these gaps, like gap up like it's been doing, I'd probably use that to offload a little bit, right? Blow this out into the highs until you have all your money out, right? At least until you have your full position that you put in out. I think this is a car in the back of this. And then you could just play with the house money and manage that position. Because if this thing corrects, right, and it has a big break of the 50-day, and this will correct, that's when you can kind of look for this thing to build a new base, give it some time to cool off. And that kind of aligns with the thesis that, you know, Stan Druckenmiller, Paul Tudor Jones, and a lot of big money on the street have been selling a lot of stock into this high. Because, I mean, this has been one of the strongest stocks in history, in the history of the market. Now, hopefully, we'll wait for this car. You know, if this thing cools off and builds another base, then yeah, you could probably go after it again. But I think buying it up here is a little not a very good risk reward. Chances are everybody's already in this, right? You probably already have a pretty big position in this. It's just the question is, how are you handling it? This is the Diamond District. You know what, let's take a quick detour and check out 270 Park. Some of the progress on Jamie Dimon's new office tower. Look at that. This thing is going to look crazy when it's done. Looks pretty unreal standing right at the base of it. Wow, NBA Elias, Tom bought Nvidia 500 shares at $250 back in the day. God bless. That's awesome. Now, I have a question for the group here. There's a lot of people that have been saying, with this crazy run-up in Nvidia, a lot of the employees are multi-millionaires, sometimes even decamillionaires. Could that potentially be a negative catalyst for the stock or for the company? If you have all the talent that built this great company, so wealthy now, able to just cash out on the equity, right? Sell the stock, retire. Me personally, I'll give you my take. I think that's overblown a bit. I think. Will you have some people that will retire? Yeah. But look at the metrics, and I always recommend this keynote speech by Ron Barron. And this is a really good metric to look for in any company. But I'll give you this example with Tesla. It's harder to get a job at Tesla, SpaceX, really any of Elon's companies. It's harder to get a job at Tesla than it is to get into Harvard, which means the best and brightest minds from all over the world are competing for a spot on that team or at that company. You don't think it's the same thing at Nvidia? So the replacement, right? Let's say if you have some like 2%, 3% of the company that are just brilliant people, you know, they're worth 10, 15 million bucks because the stock went up so much. They're like, yeah, I'm gonna call it a day, I'm just gonna retire. And that's fine, many of them probably will. If you look at the data, there's probably thousands of highly educated, highly motivated people that are chomping at the bit to take their place, right? So it's kind of like that old saying, strength begets strength. If you're a soccer player, everybody wants to play for Real Madrid, right? You want to play for the best team. And in AI, particularly, I should say the pickaxes for AI, you want to work for Nvidia. This is the Roosevelt Hotel. Mr. Barry says depends on if they have a passion for what they do. That's also true. I think most people, if you're that intelligent and you are motivated to work on solving real problems in the world, you're not just going to give everything up for 10 million bucks, 20 million bucks, right? I mean, look at Zuckerberg. Look at pretty much every tech billionaire CEO. They could hang it up and go live on a beach somewhere, but they don't, because they like the work that they do. So I think that thesis is a little bit overblown. I'll check on some of the comments to see what you guys think. Mike C says there were plenty of millionaires at Microsoft in the 90s, and most of them stuck around, for sure. How cool does that look? Hey, Lizzie Banks. Hey, Tom and chat. Any thoughts on bank stocks? Which bank stocks in particular? Now, I wrote an article over the weekend. Well, I wrote it on Thursday, doing a little bit of a deep dive into that new FDIC Q1 banking report. And we talked about a lot of the losses on the balance sheets of a lot of these big banks, particularly in the MBS portfolio, the mortgage-backed securities. Now, they're not realized losses, these are unrealized losses, right? And I think that it's important because there's been a lot of fear, mongering going around, and not to dismiss. I'm not trying to dismiss the fact that, yeah, banks are pretty much across the board accruing massive unrealized losses in these portfolios. But I wrote an article explaining exactly why. So if you scan the QR code on your screen, punch in your email, we kind of talked about the banking sector. Because if you look in Q1, we had record net income at banks in the United States. And net income is profitability. Everybody will talk about EBITDA. I think, look, I agree with Warren Buffett and Charlie Munger, God rest his soul, when they talk about EBITDA, how it's kind of like BS earnings, right? You want to look at what the company makes after they've paid everything. After earnings, after interest, depreciation, amortization, taxes, all that stuff. So net income, banks made a killing. Banks did really, really well. But the problem is some of the existing assets on the books, they're in deep, deep losses. And this shouldn't come as a surprise. This is the Yale Club to the right. It shouldn't come as a surprise because This is one of the most aggressive tightening cycles by the Fed in such a short amount of time. Now, knowing there's an inverse correlation in the debt market, generally speaking, as interest rates go up, bond prices come down, and vice versa. As interest rates go down, bond prices go up. Well, that means these banks that hold a lot of this long duration debt on the balance sheet at very, very low rates when they were issuing all this cheap money, yeah, the valuation of those bonds are in the deep red. Now, they're unrealized losses. So assuming there's not some big run on a bank or any systemic banking crisis, should they be able to hold those bonds to duration? In theory, it should be fine. But it's true that this is a little bit of uncharted territory, and it all goes back to the Fed since the lows of 2008. Really, 2009 is when we really hit the bottom. The Fed had to bring interest rates to zero to stimulate the economy, to bring us out of the financial crisis. The problem is they've left those rates there for so long, and they never normalize rates. So you have billions and billions and billions of dollars in cheap debt outstanding. And obviously nobody wants to buy that because the mortgage bonds that are being issued now are at significantly higher rates. This is One Vanderbilt. So that's what I would say about banks. On another positive note about banks, particularly investment banks, you're starting to see the capital market starting to open up here. You're starting to see the IPO market open up. You're starting to see mergers and acquisitions, more deal flow on Wall Street. Venture capital market is opening up, and private equity too. And if you think about how major investment banks make money, it's off of fee income, advisory fees and things like that. So the more deals that are being done, the more companies that are interested in buying other companies, the investment banks could advise on that, help in the transaction of that deal, the buying and selling of those companies, and most importantly, the health of the IPO market. The more companies that are IPOing, right, becoming public, some bank has to underwrite all that. And those are the major investment banks like Goldman Sachs, JP Morgan Chase, funny enough, which is right there with the big crane sticking off. And the boutique investment banks are doing rather well too. Evercore, Jefferies. So I think, in my view, maybe it's a little bit of a contrarian take, but chances are, if you're an investment banker, you're probably going to be much, much more busy in 2024 than you were in 2022 and 2023. This is the Chrysler Building. If you guys are enjoying the live stream so far tonight, feel free to leave a like on the video. And click the subscribe button if you're new. We do these live streams every day starting at 8:45. Let's go ahead and head back to Fifth Avenue. And we'll start to head downtown. Hey, James Davidson, what's up? Good to see you. We're going to pass the Steven Schwartzman building. But anyway, in conclusion, that's kind of what I would say about the banking sector. And I'll give you a little bit of a tip. Here's what I do. And this is very easy to identify this. You could just go on LinkedIn and look at all of the heads of the investment banking divisions at all these major banks. Right? This will be a little bit of homework for all of you. Look at all of the department heads, or you could just go on the websites of all these major investment banks and then just consume all the reports that they put out. You know, they go on Bloomberg, they go on CNBC. What are they saying about the state of the market? You know, they'll give you insight to say, hey, we have a lot more deal flow. Our customers are, you know, really picking up in this part of the world. You know, Latin America is starting to pick up, Europe is cooling, you know, vice versa. So pay attention, and you could use that data as a leading economic indicator for bank earnings. And there's a really good visual representation. If you look at, I'll just use Goldman Sachs as an example. So if you go to the investor relations page of Goldman Sachs, 2021 was a massive year, just a banner year on Wall Street, particularly at Goldman Sachs, because they did a lot of IPOs, they did a lot of M&A, and they made a ton of money. But in 2022, and even most of 2023, earnings contracted in a major way. Now, is this causation correlation, or is this just traditional correlation? Well, I think there's a correlation. I think it's quite obvious. Goldman Sachs did significantly less deals. The IPO market was pretty much turned off in 2022. And this is, you could do a quick Google search. So I think everybody should just do a quick Google search of how many IPOs were there in 2021 and how many IPOs were there in 2022. And there's no wonder why bank earnings tanked in 2022. MBA Elias, private lending, percent private equity is a huge untold story among the mainstream media. Rodrigo, hey Rodrigo, good to see you. Our good friend Rodrigo Bravo. Rodrigo Bravo, any relation to Orlando Bravo of Thoma Bravo, big private equity firm? Who moved their headquarters to Miami, by the way. Here's Kava. Ticker symbol CAVA. April's is interesting. You don't talk about Charles Schwab. Well, Charles Schwab is mainly a broker dealer. I think I'd say the leader in the brokerage space, in my opinion, and maybe I'm a little bit biased, is IBKR, Interactive Brokers. But I'm a customer of Schwab too. I have some money there. Oh, by the way, speaking of Interactive Brokers, I think the CEO of Interactive Brokers just sold his apartment at 157. So 157 West 57th Street is the first building ever constructed on Billionaires Row. I believe the CEO and founder of Interactive Brokers just sold his place there. Here we are at Bryant Park. Hey, oh wise owl. What's going on? NBA Elias. Tom, any thoughts about the Texas Stock Exchange with Citadel Securities? I think it'll be very good. I'm a big fan of Ken Griffin, and now NBA Elias, there's another company you should be on the lookout for. It's called Liquid Mercury. So Liquid Mercury is a new company based out of Chicago. All right, hold on. I feel like I gotta get away from all this music. I can't even think. Too many songs blaring right now. But check out Liquid Mercury by Tony Saliba. He's essentially building a derivatives exchange for the cryptocurrency space. Now, chances are, if you're from Chicago, you definitely have heard of Tony Saliba. If you are a derivatives trader, you've definitely heard of Tony Saliba. He has a very good book called Managing Expectations. So if anybody's interested in options, derivatives of any kind, read that book. It's called Managing Expectations by Tony Saliba. Now, he sold his firm. I'm blanking on the name of it, but I think he had just a little less than $1 billion exit. And I think he's going to replicate the same thing with Liquid Mercury. It's probably going to be a multi-billion-dollar thing. Oh, cool. All right, everybody. Here we have at Bryant Park, Paramount Plus movie nights at Bryant Park. Lawn opens at 5 p.m. Movies start at 8 p.m. NBA Lives, if you... Yeah, ConvergeX. Yeah. Brian, yep. If NBA Lives, if you're interested, if you send me an email, I'll send you a really interesting interview with Tony Saliba. But it's not public, so I just have to send it to you privately. My really good friend and hedge fund manager is a really good friend of his. His daughter works for the firm, and they're just doing incredible things over there. I would love to get involved. I just have just too much stuff going on. Look at the Empire State Building from here. Yeah, JC, I think you're right. I think the movie thing happens in the summer, minus the winter. But it is quite nice. You have the stage. Sometimes they have live music here. What do you guys think, Bryant Park? It's quite peaceful here. Adam says, have we gotten any interest in the software engineering role? A few, but not much. Hey, Felix says, what are your thoughts on high yield savings accounts? The interest rates are way above what banks have on savings accounts. American Express and Goldman Sachs markets are great. Well, I think Goldman Sachs is going to turn down that company. I don't know if Marcus is still going to be around. Maybe they'll sell it off to somebody. But for me, I just keep my liquidity, like the cash, you could just put it in a money market. So if you're actively managing money, there's money market accounts you could just buy that have about that 5% yield, but you have automatic liquidity. You can just sell out whenever you want. But yeah, I think, it's a good thing that savers are being rewarded again. I definitely agree with that. After a decade of essentially paying the banks to have them keep our money. This is the William Cullen Bryant statue. Hey, Karina Thompson, good to see you. Thanks for joining. It's quite nice, isn't it? I hope they make, I wish they make the Bryant Park lawn a soccer field, like a massive soccer field right here. How sick would that be? Put bleachers all around, watch a soccer game. Adhax says, greetings from Jakarta, Indonesia. Hey, very cool. Welcome to New York City. April says, beautiful. It is, Bryant Park is an amazing place, particularly at night. It's good to see the trees in bloom, provides a nice canopy. Have the Stephen Schwartzman building. Tomorrow I'm going to make it a point to start the broadcast near Tribeca. Yeah, JC, that's us right there at the Bryant Park webcam. Harry Connor says it looks clean. It is. They do a really good job here at Bryant Park. This is cool too. It's like a little walking path. To the bird fountain here. Robert Wiley says it blows Memphis out of the water. I'm sure Tennessee's nice. I've been to Tennessee once, right near Vanderbilt University. Now, I went there originally because I was working for AT&T at the time, and Nashville has a big headquarters for AT&T, right across the street from where they play hockey, the big hockey arena. And right when I landed, the meeting got canceled. So I just spent my entire day walking around Vanderbilt University, and I was so impressed. It was unbelievable. Because coming from New York, we don't have campuses like that. Not in New York City, at least. You know, the college where I went to is just a skyscraper. You walk into the building, you get in the elevator, you click the floor that you want to go to, and that's the college. But Vanderbilt was unbelievable. It's like a mini city, almost. It was beautiful. I'd love to go back. Someone says, where would you want to ideally live in New York City if money wasn't an issue? Central Park South. I don't think there's any better place to live than right on Central Park South. Because you wake up in the morning on a summer day, you go for a run in the park, it's amazing. You're next to all the best restaurants. It's the best place to live. Or, you know, building specific, probably 157, which is just 2 blocks away from Central Park South. I would say that vicinity. That's 1 Vanderbilt again. I'm surprised they turned off the fountain here at Bryant Park. Yeah, Brad's brains is the dad trying to wear out the kids. Raising kids in New York City, I don't have any experience, but it's probably one of the best places to raise kids. It's difficult because it's expensive, but if money's not an issue, I mean, think about everything that you have at your disposal. Just in terms of the educational infrastructure, you know, taking the kids to all these different museums, Museum of Natural History, Henry Clay Frick Museum, MoMA. There's so much to teach your kids. Take them to the Stephen Schwarzman building, like New York Public Library. It's just unbelievable. I mean, they could get an education even if they didn't go to physical school, and you just take them around to the libraries and the museums all day. Yeah. Here's the Bank of China. Cool building. What do you guys think of the Bank of China building? There's a good coffee shop just off to the left called La Colombe. Arias says, what is the average rent on Central Park South? It's probably over $5,000 a month, the average. But for buying something on Central Park South, you could probably get something for under $2,000 a foot, depending on the building. Now keep in mind though, and it depends on the building and depends on the unit. Most of the buildings along Central Park South are very old, so you're going to notice that your monthly maintenance is probably going to be a little bit on the high side. But my old building, 106 Central Park South, which to this day is the best building I've ever lived in my life, by far. That, if you want to buy something in that building, the common charge is going to be a little steep. But it's a beautiful building. It's a full service building, white glove service, staff. I mean, it's amazing. 24/7 doorman, and your lobby opens up into Central Park. You have New York Athletic Club, you have the Plaza Hotel. I don't know, I guess I'll ask the question to you guys. If money wasn't an issue for you, okay, and you can move to any neighborhood, any borough in New York City, where would you move? You know what, I'll rephrase my answer. If money really wasn't an issue, I think I'd buy a place at the Dakota Apartments, 72nd Street, Central Park West. If money really wasn't an issue, I'd probably try to get a spot at the Dakota, just because it's so iconic and the architecture is unbelievable. But I don't know, what do you guys think? Kimberly's is Upper West Side. Brad's brain says Sutton Place, Dock 7, Central Park South. Sutton Place, beautiful, beautiful, especially if you buy a townhouse. Optima says I would buy a place at 432 Park. Harry Macklow's building. Wow, MB Elias is Sutton Place without a doubt. I feel as if I really, really shoved that neighborhood down your guys' throat. I feel like I sold the hell out of that neighborhood. But it is beautiful. Like, it's not, it really is beautiful. Abyss is Midtown Manhattan. Arius is Tribeca, Soho, or Fide. Yeah, I mean, Fide is up and coming. I mean, you're not wrong. Brooklyn Heights is Regi. Deese is 130 William. 130 William is beautiful. That's right off of Fulton Street. Jeff in Southern Tier, New York says if money wasn't an issue, you'd get that triplex at Central Park Tower. Hey, I'm down. I'm down. Lizzie Banks is outside Manhattan. Park Slope or Brooklyn Heights. Park Slope is beautiful. Dario's is Sutton Place or Gramercy Park. We have a really nice listing coming on the market end of the summer, right at Gramercy Park. You get your own key to the park. That's a nice area. Patrice 2020s, it's Riverdale. That's way up there in the Bronx. Let's check out some of this retail storefront, because this used to be totally blown out during the pandemic. You now have a Paris Baguette. You have this Krispy Kreme place. This is a boba spot. I think this is like Chinese snack store or something. No, Josie, I didn't get to see Puerto Rican Day Parade, unfortunately. But I heard it was awesome. I heard it was pretty cool. If we go one more block down, there's this good Korean spot. I'll show you guys. You know, you're starting to see boba places pop up in Miami now, which is very uncommon, which I think is good for the future of the city, because that means more people are moving in. 35th Street if you make this left. There's some good spots here. This is where I went to dinner with the one and only TD, Teresa Diaz from the chat. Went to Hanbat. It's a good Korean spot. You just have to navigate your way through the mounds of garbage on the street first. This place, Hanbat. Really good spot. Ham says, did she pay? My rule is that if somebody's a guest that's not from New York, I foot the bill. But it was a good time. Doc 7 says it looks like commercial real estate is doing a little bit better than what we're seeing on the stream. Well, it depends, because Class A office towers are doing really good and they're actually commanding very, very high rents. It's just a bifurcated market. It really just depends. Where you're seeing a lot of things get hammered into oblivion is the Class B and Class C office. But the big buildings, the new buildings like 425 Park, 1 Vanderbilt, some of the ones in the Hudson Yards, they're doing really well. They're actually doing well. And they're commanding very high price per square foot. And I believe that that is a product of the pandemic. If you're going to bring people back to the office, they're not going to go back to old and disgusting, 1980s cubicle with fluorescent lighting. They're going to go back to, a brand new office tower with amenities. And that's what I think is going to happen. Jason says, I'll hit you up for dinner if I come to New York. I'm down. We'll go to Del Frisco's. We'll sit on the second floor, second level. And I also feel as if some product just gets dated. Right, I do believe in the real estate business, you have product that's timeless or evergreen. But then you have product that's not, that has an expiration date. And I'll give you an example, and maybe you will agree or disagree with me. But more modern American architecture, right? The 80s and 90s, that's not timeless stuff, particularly in residential. That's going to expire, and you're probably at some point you're probably going to need to repurpose it and tear it down. But a building like the Dakota, right, with that beautiful architecture, or a lot of this Art Deco architecture, I think that is timeless, where people will be willing to live in those types of buildings and work in those types of buildings. If it's a commercial office space, they'll be willing to work there. It's the more cookie cutter, kind of dated 70s and 80s stuff that people aren't really going to put up with. At least that's my take. It doesn't mean I'm right. That's just kind of my perspective. Like the Empire State Building, that's timeless. That will be here forever. People will always want to rent office space there. It is a flagship landmark. Okay, when this thing is 200 years old, there'll be people wanting to work in the Empire State Building. But if it's just a random, office tower on Park Avenue, it's going to be tough competition as you have more of these, new product coming on the market. But some buildings are timeless. Like, I think the Flatiron building is timeless, right? That's why a developer bought it, and they're going to repurpose it into condos, and they're not changing the facade at all, because that's a beautiful building. It just depends. That's my take. Again, it doesn't mean I'm right. That's just my opinion on it. I don't know, what do you guys think? But if you guys are enjoying the live stream tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these streams every single day starting at 8:45 p.m. Phillips, this is the Empire State Building office only. Well, there's offices, there's retail. So you have this Starbucks flagship here. This is the Reserve Roastery. And then you also have an observation deck. And I think you have a radio station in there too, don't you? So it's a mix. You have retail, restaurant at the bottom. You have office, and then you have an observation deck. And again, just a really quick announcement. On Thursday, I sent out our free investing newsletter to everybody. We talked a lot about the Federal Reserve. We talked a lot about the widening wealth gap in the country and the concept of ZIRP, zero interest rate policy, and what it's done to a lot of the outstanding debt on the street. So if you want to read that, sign up for free. You can scan the QR code on your screen and punch in your email. We publish on our Substack every other Thursday right as the market is closing. We have about 2 years of research posted to our Substack, available for you for free. So if you want to receive our research every other Thursday, just scan the QR code and punch in your email. Someone says, do I go to Spark Steakhouse? Not often, honestly. I don't. If I do go to a steakhouse, I like Del Frisco's. And Del Frisco's, to be honest, it's not the best food. I think it's the best environment. So if you give me 7 out of 10 food with a 10 out of 10 environment, I would much rather go there than a 10 out of 10 food with a 7 out of 10 environment. If that makes sense. It's just there's so much going on near Del Frisco's. You're overlooking Radio City Music Hall. You see a bunch of people getting out of work, a lot of tourists. It's a very, very fun environment, the Del Frisco's on Avenue of the Americas, right near Rockefeller Center. I mean, you can't get better than that. It's awesome. But Spark Steakhouse is good. People will say Peter Luger's. I think Peter Luger's is a little, I don't know. It's like an okay thing for me. I think there's better steakhouses. I think Peter Luger's they've now gotten to the point where they have overcharged for their name a little bit, in my view. Connor says, what about Delmonico's? I believe Delmonico's just reopened. They're in that really beautiful building in Lower Manhattan, just off of Wall Street, I think. So if you go to the old Deutsche Bank, that is now no longer on Wall Street. Deutsche Bank is now officially vacated 60 Wall, and they've taken over the one and only Time Warner Center. If you make that left, I think off of Beaver Street, that's where Delmonico's is. Doc 7 says Keen's is great. Keen's is really good too. I really like Keen's. Now I have a question for all of our LA viewers. If you're viewing from Los Angeles, I should say Los Angeles, Santa Monica, San Diego. What are the best steakhouses in and around that area? I may be going to LA this summer, so let me know. Any California viewers here? Oh, New England Crypto says best steakhouse of my life, hands down, in San Diego. What's it called? I feel as if LA's got to have like some of the best steakhouses in the United States. All right, let's walk through Koreatown, head back to Penn Station. But the two biggest things going on this week is inflation data, CPI, and the FOMC meeting. Steve from Buffalo says Peter Luger's does really well in retailing their steak sauce. That's true, I see it all over the place as well. TK Porsche's Mastro's is really good. Several locations in LA. I think they have a location right here in New York and one in downtown Miami, right across the street from the Aston Martin residences. Which, how cool was that, by the way, for those of you who tuned into our Miami broadcast? The Aston Martin residences is unreal. Just unreal. They've expanded that entire Miami Riverwalk. They did a really good job. Lizzie says, do I see myself living in Miami full time? Probably not. I don't know if I could live there full time, honestly. I don't know. I don't know. Maybe when I have kids. I don't know. I guess the answer is I don't know. I love Miami. I love the state of Florida, but I also like New York. I think a 50-50 split is probably the best mix. We just passed that Sorimara, which is like a Malatang spot. NBA Elias, Tom, great Mexican and Asian food in LA. I heard about that. Isn't the Chinatown in LA much better than the one here in New York? I also believe from a business standpoint, if you can do it, you should diversify your real estate holdings. Either pick 2 or 3 central locations or central hubs that you think is going to have really good and robust economic growth. So if you can build a sizable, real estate portfolio, try to pick 2 really big powerhouse cities. Because if one of them goes through a hard time, chances are the other one is going to pick up the slack and do really, really well. And that's exactly what you saw with Miami. You kind of had New York City falter a little bit, and you had this unbelievable run in Miami real estate. But guess what? what you're probably going to have now is Miami is most likely going to start to cool a little bit. You'll start to see prices fall, and then you could have that nice pair trade and get this rally in New York City, which I think we're going to see. I think you're going to see a big rally in residential real estate prices in New York, while you see a little bit of cooling in Miami. So, you know, if you can do it, try to pick 2 cities or big metropolitan areas that you know inside and out, that you do business in. Maybe your job is near there, you know, maybe you own businesses there, and try to accumulate as many quality assets as possible in those 2 places. And I think you'll do really well. But I think New York is going to do well for the next 5 years, regardless of what many other people think. I think New York is going to do really, really well. It's going to have a big comeback. Yeah, TCAL's is the national debt, 34 trillion. Now, a crazy thing is, if you took the top 5 stocks, or I should say the top 5 companies in the S&P 500, and we just liquidated them, sold them, I don't think we could pay off over half the debt, which is wild. So think about just the amazing powerhouse companies we have here in the United States. Apple, Microsoft, Amazon, Nvidia, Tesla. That's probably the one concern that I have, is this unsustainable runaway government spending. Now, the thing that I think could potentially save us, and which I actually believe will save the United States, as crazy as this may seem, I think we're going to grow our way out of this debt. I really do. You kind of have the stars aligning here with AI, machine learning, just efficiencies in robotics in general. Now, that doesn't mean we're going to grow out of this in the next 5 years. We could potentially have, you know, a little bit of a cooling off period here in this larger bull market. All right, let's cross. You could have an interesting view of the brand new Pen 2 project. Photos from around New York. So to be honest, GPT-4 has been such an incredible help for me. Whoops. Lately in answering tough, hard to answer questions. Yeah, GPT-4 is great. There's this other, I always forget the name of it, and I use it every day, which is crazy. Man, I'm so horrible with names. But it's this other AI chatbot that I think is much better than GPT, which I use every day. I just can't remember the name of it. KML says, do I think the bull market will continue if President Trump is elected? Yeah, I do. And I think the bull market will continue if President Biden is elected as well. Perplexity. Thank you, Dario. Sorry, everybody. It's been a long day. But Perplexity, check it out. Perplexity is unfreaking real. Unreal. There he is. Just don't you get tired working every day? Yeah, I get tired. But I mean, how could you not be motivated working and living in New York and Miami? It's just the greatest thing ever. And just being a free person in the United States of America, free to do whatever you want. Most people, right? The number one thing, the only thing that's really declining worldwide is freedom and democracies. That's a scary reality. So to be living in a relatively, right, compared to the rest of the world, a free world with fair markets, free and fair markets, unlimited opportunity, living in the world's most economic powerhouse of the city, New York City, having the ability to freely travel back and forth between New York and Miami. I mean, it's an unbelievable privilege. It's just unreal. It's unbelievable. So, I mean, I get tired, but then I'm like, wow, the United States is such an amazing place. There's so much opportunity here. Like, how could I possibly wake up and not just be freaking amped to crush the day? I mean, it's just an unbelievable country. It's an unbelievable city. And there's so much opportunity. It's unbelievable. It's insane. It's honestly like living in a video game. That's kind of how I explain it. And I wouldn't trade it for anything in the world. Nothing. Absolutely nothing. Well, I think I'll leave it off with that. Maybe that'll give you guys a turbocharged head start for the week ahead. Thanks for joining, everybody. It's going to be a busy week. We're going to talk a lot about inflation, and we're going to talk a lot about the Federal Reserve as we get an update on monetary policy this week. If you enjoyed the live stream, feel free to leave a like on the video. Click the subscribe button if you're new. And if you want to sign up to receive all of our equity research for free, scan the QR code and punch in your email. I write a free newsletter every other Thursday right as the market closes, and we would love to have you be a part of that. Thank you everybody for subscribing to the channel. We're over 50,000 people, and we have over 5,000 retail investors and institutions reading our work. So I appreciate all of you. God bless America, and we'll see you guys soon.